So last week we spoke about the risks and we touched on some of the areas. There was a question, I had these misordered. So somebody asked in the National Strategic Plan, is Russia ahead of China, which I had them flip last week. No, China is the biggest concern. Russia is the more immediate concern, but China obviously is weighing most heavily on the Department of Defense and defense strategy right now. So just for clarification there. So the risks we talked about, I want to talk about the opportunities. And I think one of the ways to think about it is to think how different the world is right now. And I think when I think about the past, it's really pre-pandemic. And then the present is all the things that happened since. So we've moved from zero interest rates to negative interest rates, where I think last week, the last of the $17 trillion that was carrying in negative rates is now positive. That was, I think, some of the Japanese bonds. So that's a big shift in the last 12 months. You had disinflation and deflation as a big theme during the past period where you had all this free capital. You had globalization, you had détente, where countries were not having the kind of wars they were having in terms of economic and sanctions, trade wars and the like, and now real wars. So the present is a very different environment. And I think it started with the pandemic, but it's gone on through the war. And now you see this asset revaluation due to higher rates. And while the market is out of sync with the Fed on where they think rates should be at the end of the year, how many cuts, I think the Fed's sending a message that we're going to live in a world with higher rates and higher inflation than the targets to the central banks. That means we're seeing cost of living increases coming through that are not insignificant, whether it's the Social Security increase or wage increases. We have nurses strike in the city where they rejected a 19% increase in comp. So you can see that where the world's going to have a permanently higher level of cost in it. And at the same time, we're seeing a realignment of manufacturing, where in the past, China was the world's driver for growth. That's not the case anymore. We think the reshoring, onshoring, and friendshoring has really changed the dynamics that are going on, while you have this reordering of the geopolitical environment underway. So big changes, big differences between then and now, but there are also ways to make money in this environment. I think what's defining the opportunity is this reorientation of global trade, the geopolitical conditions. But today I really want to focus on these three legislative actions and why, in our view, it's creating a big opportunity for investors to make money in this environment. And started with the Inflation Reduction Act, moved on to the CHIPS and Science Act, and then the National Defense Authorization Act. So a lot of money flowing into the system. And as you can see here, the U.S. the U.S. budget broken down and what was enacted in 22, what Biden requested, and then what was approved. And you can see even in the defense authorization, it's higher than what the Biden administration had asked for by $45 billion. You can see that the other areas didn't come down that much. In fact, we are at a much higher rate than we were before. That is an important element of what's going on, and it means a lot of money is flowing to critical areas. A big part of the Inflation Reduction Act is around clean energy and healthcare and funding the IRS. The funding the IRS is a target now for the new House to take that funding back. So that'll be one of the debates coming up as we see in the coming weeks. But this other money flowing is real dollars flowing on top of other real dollars flowing that we'll get to in a minute. The CHIPS Act, if you go back to the 1990, the U.S. was producing 37% of the world's chips. Today it's down to 10. 73% is produced out of Asia. That can't continue for the geopolitical reasons that have been described well in these calls in the past and the other meetings that we've had through 361. But you have this $280 billion CHIPS Act over a decade. 52 billion, 53 billion is for R&D and workforce development. And these incentives are really starting to play out. You're seeing it move a lot of manufacturing back to the U.S. But there's also a big number for workforce development, which deals with the skills issue and the skills gap that we have and known. But it's not just what the government's doing, putting the world in a position to benefit, or the country in a position to benefit. It's really what the private sector's response has been. And you've seen 40 new projects announced for new and existing facilities. So they're big maintenance and upgrades of the existing stuff as well as new ones. The new ones do take about 3 to 4 years to get functional. So we are a ways out on that, but you've seen over $200 billion of private investment across 16 states. They're bringing in a lot of new jobs. 40,000 new jobs have been announced. We think there's probably a need for 90,000 more. And then you've seen the announcements from these big companies putting their plans in and talking about what they have going on. And these fabrication facilities are really important in that they use a lot of materials, but the fallout effect and the multiplier effect of manufacturing jobs is big. It's 3 to 4 times, 3 to 4 jobs are created for every one manufacturing job. And that's going to be a big element of how the economy moves forward, but it'll also compound some of the labor shortages that we have and push for a more thorough and proper integration plan. The defense spending has been big too, and it calls for a 4.6% pay increase for troops and civilian employees of the Department of Defense, but it's also really upping the game in terms of cyber, aerospace, as well as expanding existing fleets and creating new advanced munitions. And I think one of the big changes that's occurred, and Hamlet can speak this better, but I think people are rethinking the way wars are being fought based on the way Ukraine has put up their defense against Russia. It's probably making China rethink how they're going to be approaching Taiwan, and Taiwan to think how they can defend themselves better. The use of drones and other capabilities to thwart a superior force is actually creating a whole new way of thinking in terms of budgeting for your future defense. I think that's going to mean a lot of spend. The other thing I would point out is the U.S. is one of the major suppliers for the world in terms of defense. We'll get to that in a minute. So these changes are leading to other leadership changes. And I just wanted to share with you the over the decade, and a few typos in here, so I apologize, but from 90 to 2000, 2010 to 2020, you can see how the leadership has changed. And we think we're at a point now where you're going to see a pretty significant change in market leadership. You've already seen Meta take a bit of a hit. Amazon has pulled back. There's some big changes going on. We think we're at a point where there's going to be a major shift. That doesn't mean we're running away from the FANGs, but the FANGs are not a unified group anymore. It's a very different risk for each company, and you really have to look at them for their own merits. And I think that's the big change we're seeing. But I think for us, one of the big opportunities is the fact that where institutions are investing and where we see the opportunities, there's a mismatch and they're underweighted in key areas. And this is as of the end of October. You can see Apple had a market cap of $2.5 billion. Microsoft at $2.5 trillion. Microsoft at 1.7. They're both back below. Apple's below the $2 trillion mark. When you look at the top 5 defense companies in the S&P, they're carrying a market cap then of about $558 billion. So when you think about the capital that has to flow to these areas as NATO nations are trying to pick up their spend, the U.S. defense companies will be providing defense capabilities for a significant part of the Western world. And these top 5 defense companies are really uniquely positioned to benefit from that. If you go to the top 5 E&P companies in the U.S., they're selling for just under $400 billion in market cap as of the end of October. So you're looking at these real opportunities where capital needs to flow that has been underinvested in, and returns. And the same thing for the steel companies. And one of the interesting things about steel, which is one of our favorite areas of opportunity, is that steel has now become a much more local market because of the energy costs that are going with it. So a lot of the places where steel was traditionally produced are now seeing either less trusted supplies of energy or just higher energy costs. And that again puts the U.S. in a very unique position for the steel business and to take advantage of it. And their big drivers for steel right now is non-residential construction. And just think about 2 big issues in the world today: the rebuild of the west coast of Florida due to the storms, and the rebuild of Ukraine, and the strains that that's going to put on the global supplies is going to be pretty significant. You then have the onshoring of manufacturing coming with new fabrication facilities being set up. And when you're doing chip facilities, you have to put an extra rebar so there's no vibration in the system. So you're adding actually even more steel than you would do it in a normal issue. Climate change is a massive use of steel. The wind towers, I think, each wind tower takes something like 60,000 tons of steel. So you're in these really ridiculous numbers where the demand is picking up, and then you get into EVs and the like, and add to that the legislative actions that I just touched on, putting a lot of capital to work. And again, the US infrastructure system has been woefully underinvested in for some time. So we see a lot of money has to flow to areas that just from a market cap basis are well or underrepresented. And as institutions move even little amounts to it, it makes big changes on these. And when you're looking at the steel companies, you have a company like Cliffs with a $9 billion market cap selling for 4 to 6 times next year's earnings at a very attractive rate. So we're seeing an environment where we've come off a world with high valuations. We're seeing pockets of opportunity with single-digit multiples and allow you to move forward in a very effective way. The defense companies carry higher multiples. They're carrying higher than market multiples, but a lot of that's warranted because they get a lot of government support. They really don't have the same impact that a typical industrial company would have in terms of the cyclicality of it. And when you think that the top spenders are spending close to $2 trillion this year, up from 1.5 last year, with the increases coming through, the US going up about 75 billion over where they were in 2001. You're seeing Japan getting very aggressive here, and the National Strategic Plan from Japan calls for them to be much more aggressive in their spend, where they're probably doubling their spend as well. You're looking at a lot of money flowing into an area where there's just not that big a market capitalization. And the US, I think, is uniquely positioned for that with the top defense companies. And for us, we're playing it through Kratos on the drones, Raytheon, and we also like L3Harris and Northrop Grumman and one of the other strategies. So those are the areas we see opportunities. And I think there's a lot of gray clouds in the world today, and it's easy to identify. I think the market has us with almost a 75% chance of going into recession. It would be one of the best advertised recessions we've had in history. And now you're starting to see some people coming with very divergent views. Thomas Lee was on yesterday on CNBC talking about going back to the FANGs because they're so unloved. I think it's a really interesting environment to make money, but if you're too hesitant, you're going to lose these opportunities because the market's going to move pretty fast to get capital flows in to support this. And the US is not alone in making these kind of spends. Other countries are. And when everyone's spending on the same areas in really tight supplied areas, it creates big opportunities. And for me, this is different, but similar to the low growth environment after the tech bubble the last time, where you saw the opportunities were in the US market. Energy was about 4% of the S&P weighting. It went up to 25% in 7-year period. Industrials were lower weighted. They skyrocketed, and materials were a 2% sector that became a doubling of their sector as well. So when you see that kind of capital move into companies with these kind of market capitalizations, you can see a pretty significant move to make money in this environment. So I'm going to stop there because the public markets don't seem as sexy as they can be, but I think in this environment, there's some real opportunities to get outsized returns in the coming period. So I'll stop there, Mark, and open up for conversation.
So, questions, comments?
Steve, a quick question on. My sound is off. Huh?
You got to leave
My
the
mic is on. Okay. Okay. Just a quick question. You're talking about defense spending in U.S. companies. Are there any non-U.S. companies that you would put on that list?
There are a couple. The questions are there non-U.S. companies that would be on the list for defense spending.
Right.
I think there are a couple. There aren't that many defense companies overall. So I'd look to France. I'm blanking on the name of their big defense company, but there really aren't that many options. And I think the one thing that companies are going to look for, or countries are going to look for, is how trusted is the supply, and how trusted are they as partners. So I think that's going to be one of the big changes that's going on in accessing a lot of critical materials or critical needs having to come from trusted sources is going to create that kind of bifurcated world that we've talked about. So I think there's a really interesting connection of the reorientation of the global economy due to geopolitics and due to the higher inflation environment that we're in, more permanently higher rates, with governments having more limited bandwidth. And when I read the national strategy for the US and national strategy for Japan, national security strategies, it looked like they were written by the same guy. So I think you're going to see that kind of alignment carry through.
I'm just thinking two things, BA Systems,
Yep.
there's a unpronounceable German company that's really famous for making tanks and armored vehicles. So,
Yeah, and the German hit that, they hit it with one of their tanks in Ukraine. So,
just defense.
you know,
Rheinmetall. Rheinmetall.
Okay.
Other questions, comments?
Hey, Stephen, it's Safa. How you doing? Let me see if my camera is on.
Yep, you're good.
A quick question. I mean, as you know, I share the views that we need to spend on defense and infrastructure, and that will be the core area of growth for capital markets as well. But I'm wondering if you have any historical data that shows how defense companies, for instance, have fared, how the stock prices have fared rather in times where there's been a massive increase in defense spending while capital markets were still in decline and under pressure because of conditions such as what we have right now. For instance, there's a sea change in terms of the interest rate and the inflation environment. So that's going to put a whole pressure on the entire capital markets. And I'm wondering if we have been able to correlate how previous spending increases in defense or even construction have translated actually to stock price increases for these companies.
I think really the best example you have is after 9/11, which was a similar kind of crappy market environment and a more positive outcome for those companies. But that was a very kind of unique short-term capital flow issue. I think what's different this time is the fact that the rest of the world is waking up to the fact that they can't count on the U.S. to carry the ball for them, and that the threats from the actor states, the autocratic states, have grown to a level that is very different than they have in the past. So I don't have the exact numbers. I think the early 2000s would be the best example, and I think they did well during that period. But I think the issue we're going to see is that when NATO is really taken seriously now, the 2% GDP target for most of those countries, they're not going to hit it soon, but they're going to be pushing it up to it. And when you only have, about $1 trillion of market cap all in for the sector, it's going to be very easy to see how certain companies are going to do quite well in that environment.
Other comments, questions?
Either they don't see the opportunities or not.
You guys,
It's
yeah.
interesting.
Well, just a quick comment is Japan was spending 1% of GDP, and everybody made a big deal about how much they're militarizing, but they just upped it to between 2 to 3% to equal the NATO.
Yeah, but it's
But this third largest economy in the world, so divide that by GDP, as you pointed out, it's a lot of money spending in very few companies.
yeah, they're doubling their spend. They're adding 50 billion alone to their spend, and I suspect it's going to be higher when they're done because the issues there are getting hotter for them, and they're really, it's a pretty significant change. And Hamlet, you can speak to this better than I, but the mindset change in Japan in the last year is, I think, massive.
Yeah, and my point was just the dollar impact, because Japan is actually still a huge economy, is material.
Yeah, this is also a global trend. We actually are talking to a couple of VCs in Japan and also in Europe and UK that have a very similar thesis as Iron Gate, investing in dual tech, national security related technologies. But you're starting to see the traditional allies starting to figure out how we can talk to each other, collaborate on disruptive technologies that are going to have an impact in critical technologies, national security, et cetera. The other thing also to think about, what's different this time is a lot of the innovation is coming from the startup community. And in many cases, you're not only seeing companies that are being formed, but you're going to start seeing entire industries formed around some of these technologies that are coming out. So overall, that's going to have, I think, a longer term impact in terms of domestic GDP and job growth. Because if you look at where we're at right now from a debt to GDP standpoint, there's really no way to fix that outside of really revitalizing, rejuvenating, and creating whole new areas of growth in the economy. And I think this is going to be a sector that's going to be a pivotal part of this in the long term.
And the strain on the resource sector for supporting the defense industry is going to be quite high.
Yep.
Securing all the rare earths that you need, all the materials that you need to produce advanced technologies is a big issue. And it's also another tight market. So the copper elements, the rare earth elements, the magnets, all that is going to be really tight in this environment.
Yep.
Other questions, comments?
This is Peter. Just generally agree with all the comments, especially with what I see, and I agree. As much as we focus on Ukraine and China, we always, every now and then, North Korea launches a bunch of missiles too. So all these issues, I only see more spending going forward.
And it's hard to keep in mind how small the industry actually is. We think of it as much bigger, but it is really not that big. And that creates a big opportunity for investors who can get there, because it's very hard for the big institutions when the aerospace and defense weighting in the S&P, I think, is around 2.7%. The defense part of that is probably less than 2. There's not a lot of companies for all this capital to chase. And I think that's a big opportunity. And I think, Hamlet, you'll see some really interesting technology developments out of this area, and space developments coming out of the defense companies as well.